Hi, I'm Tom Lydon, editor of ETF Trends, here in Washington, D.C. at the Charles Schwab Impact Conference with Christian Wagner, who's the CEO of Longview Capital Management. Christian, thanks for stopping by.
Thank you.
Listen, you are one of those unique ETF strategists that we've been hearing about. Advisors that create ETF strategies for clients, not just clients, but other advisors that can allocate client assets in kind of a strategic way. Tell us a little bit about your business.
The business really grew out of the fact that we were advisors and had private clients and had some unique perspectives on a couple of different areas. Our background is primarily fixed income and alternatives. And as we went out and met with other advisors, we found that there was really a need based on the wonderful logistics of this new ETF product that we could develop models for other advisors to use.
So, how is that working? You're available yourselves on other platforms like Charles Schwab?
We're on multiple platforms, far too many to list.
Yeah.
And it's working well, primarily because there's this incredible interest in the space. Again, when it comes to ETFs, we all know the most reliable source of alpha, and that's low fees.
Yeah, absolutely.
Deliver it onto your client, and it's a win.
Are you finding advisors are embracing ETFs, but they don't necessarily have the infrastructure to do the research or the plumbing to do the trading and that type of thing, and that's something you provide?
I think that there's a little bit of everything to what you just said,
yeah.
But I really believe that and advisors have really just begun to scratch the surface on how to use this new tool.
Okay.
And trading is a big issue. Research is another big issue, but
sure.
with companies like yours being able to go in and have access to that information, it's critical.
So you guys specialize in fixed income, and give us some examples of some of your strategies, and also, interestingly enough, there are a lot of unique ETFs that you use that are in those strategies.
Right now, our strategies are very tactical around core allocations.
Okay.
One of the most unique strategies that we've seen come out in the last 6 months is the Deutsche Bank Infrastructure Municipal Bond product, ticker RVNU.
RVNU, okay. So how are you using that in your model?
We are using that as a sector allocation within our models.
Yeah.
And we run taxable and tax-exempt models. And we use those as the municipal bond area has a very unique advantage as it relates to correlation to other asset classes,
yeah.
and yield ratio aspects and returns compared to taxable bonds. This particular ETF fits a very, very unique profile and dials down a lot of the risk that we don't want to have as municipal investors.
And specific to that ETF, we've heard the story about what's going on in Detroit, and tell us a little bit about the strategy in that ETF. It actually is able to pull the city revenue out of the ETF, and just help me out with this.
Right. Yeah, I mean, basically what this particular product does, Tom, is, and it's the only one on the street that does it, this is an infrastructure municipal bond ETF.
Right.
We are looking at, the American Society of Engineers says by 2015, we have to spend $3.5 trillion in infrastructure to fix the roads and the bridges and the sewers and everything. And we've got a wonderful ranking of D+ right now, which is very comforting as I ride the train down from Wilmington. But more importantly, what this particular ETF has done is it's stripped out the general obligation risk of the largest cities and areas because the pension risk is completely unfunded.
Yeah.
We could take, let's take an example in your backyard. Newport Beach lifeguards. Until they did the recent change, a Newport Beach lifeguard after 30 years of service retired with a 6-figure pension. That's not an obligation I want to put my client money into and have to worry about New Jersey, California, Illinois, all those states. So this is essentially based on how do we go out and find great credits, but more importantly, how do we go out and find credits that are backed by revenue from a project, a bridge, a sewer, a power plant, those types of things. So we've stripped out all that other obligation and employee benefit risk.
So here's a case where Deutsche Bank created the strategy, you do the research, find the strategy available, and you're able to take advantage of the strategy by implementing it within your models, correct?
We implement it within our models as a sector allocation within those 17 fixed income areas that we look at.
Yeah.
And this happens to be so unique and the yields are so attractive and the duration's okay. I mean, it's not a huge amount of risk. I know that the world is currently running away from fixed income. However, you can't control what the correlation aspects of these securities do in a portfolio.
Yeah. The business keeps getting better. There's more opportunity, and thanks to folks like you, you're making it a little bit easier for those of us advisors out there that don't necessarily have the ability to do all those research and create those models. So thank you, Christian. It's great getting time with you.
You too.